What's up, guys? It's Ray J back with another video. And in this one, I want to break down what's happening with Tesla SPY and the overall markets. I'm going to break down what's going on with the economic calendar moving forward and why next week is going to be absolutely insane as we have big earnings coming out, not to mention some new details coming out involving Tesla's earnings. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total, and the offer ends very soon at the end of March. So what's happened to Tesla so far is the fact that Tesla failed to get back above this blue trend line of support. This was our October support that has failed. And then simultaneously, we have this resistance. You can actually draw it out like this. That's existed since we saw this kind of like downtrend that was respecting Tesla since December. And as you guys can see, Tesla's been failing so far and it's continuing to look a little bit weak. Now, yes, Tesla looks a bit more bearish considering there's a weakness on the 4-hour time frame, considering the whole market is showing some weakness as well, looking at some new indicators I'm going to show you in a couple of minutes, and also because of this head and shoulders and other factors like that. But just know that although this may frustrate you, it is not necessarily the end of the world or anything like that, because Tesla is going to be fine for the long term. That's the first thing you have to remember. Look at this in a more optimistic lens. If we get some kind of dump in Tesla, it's another buying opportunity, another opportunity to dollar cost average downwards and to get more shares for cheap. And then simultaneously, if it gets a big run after earnings, we could still see a big bounce. So earnings is in a couple of days. We'll see if that helps this bounce or not. But for now, we do look a bit more bearish looking at these trends. I'll talk more about the chart in just a couple of minutes. Let's first talk about some news. So I went over the majority of news already. I'm just going to go over this one piece of news in more detail. So what's happening is Tesla's going to fix its software for over 1.2 million imported cars and Chinese-made cars, according to regulators. And that's some very, very important news. This is going to be affecting the Model S and X, and then some of the Chinese-made Model 3s and Model Ys over some safety hazards that were described. This is a like what they would describe as like a recall under Chinese regulations. However, this is not your particular recall, even though the media is screaming it's a recall, this and that. The media is saying it all over again. But the honest truth is that Tesla will fix this with a software update. So in total, they recalled, or quote unquote recalled, 335,000 vehicles. These are imported Model S's and X's, and then the locally produced Model 3s, Model Ys in China. And then they also have to look into about 871,000 Model 3 and Model Ys due to some like steering issues. That this is what the regulators are claiming. But to fix all of this, all they have to do is a software update. They're going to deploy a software update for the affected vehicles remotely for free. This is what the report is telling us. So is this a recall? No, guys, it's not your conventional recall. Although the market is claiming it is one, it's completely different. So I want to make that very clear. The media is screaming it's a recall. They're recalling 1.2 million cars. I'm seeing this all over the news. This is not a recall. This is simply just a software fix. And I like the fact that Reuters mentioned it's just to fix software. So I want to give them some credit for that. Other mainstream sources are calling this a recall. It's not necessarily that. Now, what's going to affect Tesla going to next week? There's two main things you guys have to remember, okay? The first thing is going to start off like this. Monday, okay, it's going to be very quiet. We just have new home sales and factors like that. So the data that comes out is more minor. Tuesday is going to be more housing data and some data from the Richmond Fed manufacturing numbers. Also not that serious. But then Wednesday is going to be a big factor affecting Tesla. We have big data coming out. We have the Fed giving us their interest rates decision. They're going to most likely keep rates the same, but we're going to be looking to see what they tell us about their economic projections, at least moving forward. And then we have the FOMC meeting. Now, FOMC is going to be very, very big for the market. It's going to be massive because Jerome Powell and the Fed have stated in the past that for 2025, they're not expecting to cut rates that much because of the fear of inflation going back up and because of other factors out there. So we'll see what that leads to. Now, with Jerome Powell coming out and saying things about how the Fed has to be very, very careful and factors like that, we'll see if he maintains that stance or not. If Jerome Powell remains more hawkish and he says things about how inflation is still a big issue, the Fed has to be very careful. The Fed has to just be very careful how often they cut rates and things like that. And they don't imply they're going to be cutting more than expected. That could be bearish for the stock market. If Jerome Powell starts saying that the Fed may cut a little bit more than expected, and there's been a lot of progress being made on inflation, there's a chance that could help the market bounce. Now, Donald Trump, the president, he has been pressuring Jerome Powell to cut rates even more. So we'll see, does Jerome Powell end up capitulating? Does Jerome Powell start to listen? Does that cause him to budge? Or does he maintain his neutral stance to make it very clear that he is not necessarily going to worry about that? We'll see about that. So we have to be very patient. So FOMC is going to be big. It's going to cause the market to get a big rug pull or a big bounce. It's going to be affecting Tesla. So just keep that in mind. Then on Thursday, we have some GDP numbers coming out. So we'll see what that leads to. Fridays, when we have some employment numbers, that's also going to cause some volatility. So keep that in mind. But the main day for data is going to be on Wednesday of next week. It's going to be crazy with FOMC. Now, for earnings, this is what the earnings calendar looks like. It's a very important earnings calendar. If you guys want, you could take a screenshot of this over the next couple of seconds. You could pause the video and do that if you want. But just as a reminder, Monday we have SoFi and AT&T. On Tuesday, we have Boeing and GM announcing earnings alongside Starbucks and a few more. And then Wednesday is going to be insane. On Wednesday, we have Tesla, Meta, Microsoft, and IBM all announcing earnings. And then the Tesla is going to be the big one. It's going to be affecting our share price. We'll see if Tesla helps the share price bounce with lots of optimism about AI developments, or if it's not enough to wow investors to make it some kind of rug pull. Anything could happen with Tesla's earnings because of the high expectations that investors have. So I'll give you guys a preview about that later on, and then we'll see how it goes with earnings. On Thursday, we have Apple announcing earnings, not to mention Intel, so we'll give that some time and we'll see a big reaction. Keep in mind that when we have these earnings on Thursday after market, on Wednesday after market close, we're going to be looking for a big reaction on Thursday. And then on Thursday, when we have Apple's earnings and Intel's earnings, look for a big reaction on Friday. So just keep that in mind. The market's neutral right now. There's not way too many sellers, but there's not way too many buyers either. We're kind of like in the middle. So we're still in that stance. Momentum is neutral as the market is slowed down just a little bit, but it's not really enough to get us fearful again. But the put to call option ratio is at extreme greed. This could be a little concerning because we're seeing a lot of these puts being closed. We're seeing them being squeezed. But because there's been more call buying than put buying over the last 5 days, this could cause a shift in the markets. When we typically see the market hit these extremes, that's when the market switches directions. That's typically what happens. The VIX is also going to be looking for a big move, so we'll see what that leads to. With that being said, guys, I'm going to briefly go over the rest of these tickers. I'm not going to go over everyone, though. The reason for that is because it's Friday, and I want to make this video kind of quick. So as far as Tesla goes, the 4 hours looking weaker as we're rejecting off this trend line of resistance. And then when you look at the daily chart, okay, the daily is also rejecting, looks weak on the daily, and we favor downside a little bit more. Unless we reclaim 410, I think the odds are favoring Tesla dipping to about 402. I've been saying that for the last couple of days. We're looking bearish, and this imbalance might take us down to about the low 400s. So please keep that in mind. As far as Nvda goes, we look a bit more bearish. I want to call out that when you look at the daily charts of Nvda, we also have this gap to fill. So if we do get a small rebound, it's possible, but this is going to likely be filling this gap very soon to about 138 to 140 from a technical standpoint. Let's talk about our ETFs, and I'll talk about Bitcoin. As far as SPY goes, we're rejecting on the 4 hour and also on the daily. We failed to break past 610. If we break that, we could try to bounce. But as of right now, we're below that. There's a bearish divergence on the daily charts. If you guys look at the MACD, volume has been declining, and we have a bunch of gaps on the daily chart, which makes me suspect there might be some downside coming. So I expect us to fill some of these gaps. I think we're going to most likely get that rejection. Not sure if it's going to be after or before FOMC, but for now, we do favor it for the shorter term. For the QQQ, we're kind of rejecting right here. We're going to be looking to see what ends up happening. If we end up failing right here around this like 528 area, we're looking for essentially 524 to fill that gap and these lower levels to be visited. So I see some weakness on the QQQ. We could be looking for some downside if we get that rejection. On the Russell 2000, we are looking indecisive on the shorter term time frames, but we also have a lot of gaps to fill, and we failed to break above 230. So it's favoring a move to about 226 and maybe even lower. So be careful with this as I see some downside risk. ES is rejecting on the daily. We have not lost key support at 6125. If we lose that, we have a gap to fill towards 6080. So keep that in mind. On NQ, we were supposed to hold above 22,000. We're not holding it. There's a gap to fill around 21,700, so I favor downside a little bit more. For Bitcoin, we're trading sideways. This might be revisiting 101,000, so please be a little bit careful in case we do get that dip. I already went over Nvda and Tesla, by the way, so looking at Apple, there is some weakness. We're trying to hold 220 to 221, our 200 EMA on the daily. We'll see if we get a bounce after earnings or not. This might dip a little bit more, and we'll see what happens after earnings. Earnings is going to be the next big factor for this. For coin, we got a big rejection on the daily. We have a gap to fill now. We could be returning to about 296 or below. And I think that this could be favoring downside for the lower 290s. So just keep that in mind. Amazon's in the middle. It's still holding up its inner range between 230 and 235. I think it's going to likely shuffle for some time, but be careful. We have two gaps to fill down here if we do get some kind of rejection. So if we lose 230, I'm going to be looking for that gap fill. I'm sorry, if we lose 233, I'm looking for that gap fill, not to mention the one all the way down here at 225. So we'll see about that. But as of right now, it's trading sideways. Meta is looking more bullish. It's completely outperforming the markets. There's a good chance it may try to continue to push for 650. If we break 650, we could push more, but just know there's a bearish divergence developing. If we can't break 650, we're going to likely return back down to about 634. For Microsoft has this gap to fill way down here around that 430 area if we do get some kind of rejection. If we break past 448, we're going to be looking for a bigger push to fill this imbalance towards 450. This could be dipping to fill that gap, so just be careful if we get that rejection, so just keep that in mind. And then Google looks a bit more bullish. If we hold above 200, we're looking for 204 as our target or above, so it still looks more bullish. With that being said, guys, the market is looking a little bit weaker and heavier. So is Tesla for now, but we'll see how we're affected by FOMC and big bank. Not big bank, but tech earnings. Excuse me, guys. We have tech earnings next week. So we'll see how things go. I'll talk more about Tesla in my video for tomorrow. Until then, I thank you all so much for listening. So have a good day and peace out.